It's about that time of day again. My name is Joseph. It's Monday evening, August the 7th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro this evening. Crude is range bound with a beautiful example of the pendulum swing. So we're waiting for buyers to fail up above the range for selling opportunities back down to the low tomorrow. The S&P is bullish with a multi-tiered channel and a hidden triangle telling us look for a rather deep pullback to buy the dip on Tuesday. Nasdaq is bullish with two channels telling us to watch those swing lows and look for buying opportunities with traps and failures on the way up to last week's high. Gold is bearish with a big old flag pattern on the chart tonight telling us to focus on failures up above the high of that short-term bull channel with a target back to yesterday's low. And of course, wrapping up tonight on the euro's range bound and trading sideways. So the plan is to focus on failures around those edges using the two-try rule on Tuesday. I have a great newsletter in store for you guys and gals tonight. We had a great reaction Monday, the Monday following last Friday's non-farm payroll number, and we get a big day setting up for Tuesday's session. You know how we roll. Got a great video in store for you guys tonight. Got a great plan of attack for tomorrow. Before we jump in though, please don't forget, the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're watching this video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Follow that link. Come join me here on the blog at Sideways Markets for the full-length version. While you're here, don't forget, join the mailing list. I'll send you an email every evening when the nightly newsletter goes live. Follow me on my many different social media channels. We get Stock Twits, Twitter, Facebook, LinkedIn. Pick whatever your favorite flavor and follow me throughout the week for important charts, links, and updates. Don't forget to grab those charts here below the video tonight. Lower left-hand corner, right below the video on the blog at Sideways Markets. Don't forget to grab those charts. How easy is that? Have all the charts from tonight's video on your computer ready to be used tomorrow. Grab those charts below the video and the link on the blog. And don't forget to grab your free pass. If you're not a member here at School of Trade, what are you waiting for? Grab that free pass. Come join me this week in the trade room, right, as a guest here. And I look forward to teaching you more in 90 minutes on that free pass than you will learn anywhere else on the interwebs. I can pretty much guarantee you that. And I know that other websites don't do this, but I am actually a human being standing by, willing to answer all your questions. If you got any questions, hit me up on live support on the right-hand side of the website, and I'm looking forward to speaking with you guys. Got a big day setting up tomorrow, but we don't have a lot of news on the schedule as we jump into the economic news calendar here for tomorrow. Tomorrow's Tuesday, August the 8th. We had a lot of action today, but not a lot as far as news tomorrow. We really only have two major news events. One's the housing start from Canada tomorrow morning. Difficult to say how much that's going to move the needle. And tomorrow night we're going to hear right from the consumer price index from our good friends in China. Other than that, we have kind of a minor-ish news report tomorrow at 10 a.m. Honestly, 10 o'clock Eastern time is always a real volatile time of the morning anyways, so I'm not expecting that 10 o'clock news to have that big of an impact, but be aware, and you should have this on your calendar every day, right? 10 a.m., we call it the 10 o'clock shock because we oftentimes do see major trend reversals or at least big corrections, big pullbacks right around that 10 o'clock top of the hour. Opening bells tomorrow, of course, going to be 8:20 for gold and currencies, 9 o'clock for the energies, right? 9:30 for the NYSE, right? And the Nasdaq, and of course we'll be in our trade room tomorrow morning at 8 o'clock Eastern time. Don't forget, right? We're going to put the plan together tonight, and then we're going to execute that plan together with all of our advanced members tomorrow in the trade room. What are you waiting for? Come join me as a brand new advanced member, and I'll see you guys tomorrow morning at 8 o'clock Eastern time. Let's jump right in. Starting off tonight, we got crude oil, S&P, we'll do some Nasdaq, gold, and we'll wrap up on the mighty euro tonight. Starting off tonight here with the crude oil, the black gold, the Texas tea. Crude is range bound with a short-term spike in channel for tomorrow. This trading range, I think, is the most important thing right now. It's showing us a perfect example of the pendulum swing going back and forth around the range, which tells us to look for the buyers to fail for a move back down into that range. Now, this spike in channel is no joke, right? That spike in channel definitely gives potential for the buyers to take control tomorrow, but they need to show us some proof by holding the pullback to the moving average average before we have any confidence to be a bull going up to yesterday's high. Remember, the hardest part about a trading range is staying away from the middle. So stick to the edges, avoid that no trade zone, and if you're going to be a buyer tomorrow, either you got to get some proof by holding this pullback, or you're buying down around that prior day low at 48.50. I think the most important clue here right now is right inside, right there, right? We sat in kind of a bear biased trading range for, boy, quite some time this morning, right? It was an overall slow start to the day. But look what happens. The market rotates outside of the range and then conveniently blows right back down. You'll notice, right, the size of the move above the range is about the size of the move below the range. You'll also notice it's right about the same spot again right now. I call this the pendulum swing. And to really get a good understanding of this, I want to remind you, it always starts first with balance, right? That's what it always starts first with. So real quick, talking about the term the pendulum swing, anytime a market stops making lower lows or higher highs and starts going sideways, what happens, right? We have a balanced market. The moving average flattens out, right, et cetera, et cetera. I'm going to give you a couple examples of this, right, as we go through this. But the most important thing right now is with the trading range, right? And that trading range, think of there as kind of a needle right in the middle, right? And that's the pendulum, right? We're balanced right in the middle of that range. Now, imagine now, right, some news comes out or something happens, right, and price jumps up, right? Price jumps higher here. It jumps higher, and the pendulum swings now higher. Now, if these buyers can't hold this pullback and continue, what's going to happen? Will the price move back into the range? It will. But will it stop there? It probably won't, will it? No, it'll probably cruise right on through. About how far? Usually about the same amount in the opposite direction. So again, I call this the pendulum swing, right? Markets will swing up above a balance area. The key is it starts off with balance, right? Starts off with balance and it rotates up, can't hold itself outside of balance, and then swings all the way, right, from overbalanced to underbalanced, right, before swinging back inside that range. Now, that's a range example. But at the same time, you could also look at this as, how about a channel, right? Bear channel, rotating back and forth, right? You could say we found some balance inside that channel, right? Put the needle right in the middle, right? Put the needle right in the middle. Now, what would happen if the market went through the low? Yeah, we'd be out of balance, right? So what happened then? Yeah, it would rotate about the same amount back to the opposite side, right? So we expect to see rotation not back to the channel, but actually through that channel so we can then sell it back down again. So think about how a market becomes balanced, right? Most often inside of a trading range, right? Like we saw here, market becomes balanced. We then run outside the range, slam back down in at usually about the same amount. This applies to trading ranges. It applies to channels, right? And again, I kind of call it the pendulum swing because you think of the pendulum right in the middle, swings up, overshoots the high, swings down, right, overshoots that low. So beautiful example of a pendulum swing. Now here that pendulum is really swinging back and forth right now, right? Now it's really swinging higher here now. So where would it likely swing back on the opposite side? You got it, right? Buyers looking for failure here and want to see those buyers to fail going back down to the opposite side. So that's the goal here for the sellers here tomorrow. But as you can see, though, we have this spike in channel. This is no joke. This is a pretty obvious, very strong move higher. Again, it's in a context of a range-bound scenario, so we're not going to give it too much confidence to be a buyer here right now. But definitely that's what the buyer's looking at right now, right? I almost called this a bull move, but again, what's more important right now is the context of that trading range. So here's ultimately what buyers and sellers are looking for here tomorrow. What I'm waiting for right now is I'm waiting for buyers to try again, and I'm looking for them to fail so I can sell this sucker back down in. Once we start seeing those buyers try to buy the next pullback and fail, then we'll be able to start, right, putting ourselves in positions with short-term entry patterns, getting back into this market, right, going back down in. Now remember, the most reliable target is always going to be right back in the middle of that range, right, so around the 49. And then the other target, the kind of the runner target, will be back down to the opposite side. Okay, so make sure you take some off inside the range, hold the runner right on all the way, again, pendulum swings all the way to the opposite side there. So that's what sellers are looking for right now. They're looking for buyers to try to hold that next pullback, fail, right, and we'll look for that move back down again. There are lots of different ways that we can do this, but most importantly, though, I want to see them try to hold that pullback, struggle, right? And then once we start seeing the struggle, then we'll know it's time to either get in here, or if we can't get in there, looking for selling opportunities before, right, we finish off that pendulum swing all the way in the opposite direction. Now, what about the buyers here? Well, first of all, the buyers have to prove to us that they mean business. So before I do anything, I need to see the buyers hold a pullback and retest that high. If the buyers can hold a pullback and retest that high, we then have two scenarios we're watching for. One scenario would be we pull back, we retest the high, but we don't go through the high, right? Then I can go looking for buying opportunities down below that range, right? And I can start taking nibbles down here, right? Buying at that low. Right? So if we go back to retest the high, that will be a good start here for the bulls, and buyers can start taking nibbles right around the low of that range, right? Because it will be a spike into a range at that point. Now, what if the buyers pull back and go slamming through the highs? That's really what we want to see here for tomorrow. At that point, where's the objective? The objective is to get back to retest the high at 49.73. At that point, I am too high to buy, right? I don't want to buy high. And as I always mention in this newsletter, anytime I find myself in a position where the only option is to buy high, what do we start watching for? We start watching for traps. So assume now the buyers do pull back, at least to the moving average, right? They get a price up. Price runs higher here. Now what I'm looking for is I'm looking for prior swings to buy with traps, because I don't want to be buying right into the objective, which at that point, right, is going to be that 49.73. And that is not only for 49.73, we also have that big round number at $50 a barrel up there. So again, just don't buy high. Look for traps. Look for failures below the moving average, right? Look to be a buyer by buying low. But again, be a bear until the bulls can take control of this right now by holding that pullback, and watch that pendulum swing strategy here for tomorrow. Moving over here now to the E-minis, we got the S&P followed by the Nasdaq here. The S&P is bullish with a multi-tiered bull channel, a trading range, a battle zone, and a pair of measured moves and double ups to work with for tomorrow. Now, first of all, this bull channel is a multi-tiered bull channel, and you can break that really into two halves, telling us to use the bottom half to buy low with a target up to that midline, right? Think of the midline of this multi-day, multi-tiered channel, right, as a level of resistance that we want to avoid buying into. The trading range, right, that trading range down between 75 and 73 3/4, along with the battle zone, both make for support areas, right, for reliable buying opportunities, and that measured move and the double ups, they're going to act as targets for the buyers tomorrow. Now, one thing that stands out on this chart is we have a hidden triangle, right, which is down around that battle zone. So don't be surprised if we get a nice deep pullback to allow buyers to buy the dip on the way back up to the highs tomorrow. As you can see, I think the most important clue right now is this little tiny old trading range. I'm going to call it a triangle here. You're more than welcome to call this a trading range right there, right? Whatever you want to call it. Trading range, triangle, I'm going to call it a triangle. Now you'll notice that triangle puts us right there. There's a little gap, right? On Friday we closed down, we opened up, right? So there's a gap to be filled. You're going to see this in a moment again on the Nasdaq, right? There's a gap to be filled down around Friday's close and Sunday night's open, right? With, of course, being electronic trading hours, we open up Sunday night at 6 p.m. Eastern time. They go all the way till Friday, right, at 5 o'clock Eastern time. We talk about all that information, by the way, inside of our beginner classes, right? So if you're wondering what are the open and close times, we don't trade the pit anymore, right? Everything's electronic. So it's 6 p.m. to 5 o'clock. We talk about all the trading calendar, the times. It's all covered inside of our beginner classes. So make sure you have a good foundation of knowledge of how these markets work. If you don't know when the market opens and closes, if you don't know when your broker's overnight margin kicks in, if you don't know the difference between electronic trading hours and regular trading hours, it's important you stop trading right now and just get some basic education on that. So the bottom line is we closed on Friday, opened up on Sunday, right? And of course the gap there on that chart. That also lines up right around kind of the point. We have covered a lot of information on tonight's newsletter. If you're brand new here with me here this evening, thanks so much for stopping by our newsletter. I send this out every evening, Monday through Thursday. And if you want to learn more, about our trading strategy, if you want to learn more about our 3 levels of membership, if you want to learn what it means to be a client here at School of Trade, I've got a great free trial on the homepage of the website. You can follow the link in the description of that YouTube video. Come join me here on the website at schooloftrade.com. We get a great free trial. We have 3 levels of membership: beginner, intermediate, and advanced membership. And I'm always here to answer all your questions. I know most websites are fully automated with all the robots and gizmos these days. I'm old school. I believe in picking up the phone, responding to my emails. I believe in being here for all of my clients and providing a very high level of customer service. And I look forward to giving you the same great opportunities we find every day with all of our clients. So join the trial, join our beginner, intermediate, or advanced membership packages. Learn more on our website. Check out our frequently asked questions and keep in touch. Don't forget, tomorrow morning, 8 o'clock Eastern time with all of our advanced members. If we don't see you guys tomorrow, we'll do it again tomorrow night, same time, same place. You guys be well out there. Be nice to each other, will ya? And be here tomorrow. Adios, amigos.